First of all, just want to set the scene. Talk to us a little bit about the peak to trough declines. Now, we've seen an Nvidia 15%, it's down 6% today. The rest of big cap tech is down, I think, $1 trillion in market cap the past couple of weeks. What's going on here?
It's the white knuckles that started last week, as Steve talked about, in terms of Tesla, Alphabet on CapEx. But in my opinion, this is the week. When we end the week, we're going to look back and say the AI revolution, the monetization started. So I believe if I look at all of our checks, what we're seeing from Microsoft, from Amazon, across software, ServiceNow, Palantir, and others, this is the prove me moment for big tech. And that's why I expect gold medal performance from big tech playing out this week. And if you look at the last 18 months, this whole bull market, skepticism, haters have hated it as we've gone up. This is just another speed bump on what I view is a tech bull market that continues for the next few years. And this will be, I think, a pivotal historical week for big tech, starting tonight with Redmond and Nadella.
The stock market is buzzing over the latest headlines. Investors are abuzz with mixed feelings about the renewed AI craze. The hype feels reminiscent of the dot-com bubble that burst catastrophically in the early 2000s. But experts argue this time it's different. Companies like Nvidia, Microsoft, and Google are all making headlines, with their stock prices soaring due to their advancements in generative AI technology. Yet, a lingering question remains. Is this the dawn of a new tech bubble or the inception of revolutionary growth? Let's answer this question. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you don't want to miss the newest market updates. Now, back to today's video.
Walk us through your thesis. We've had the big run. We know you're bullish on tech. Materially, what are we going to see the difference in the second half?
I think now it's the second, third, fourth derivatives of AI playing out. Because it's not just about godfather of AI, Jensen, Nvidia, and of course Microsoft and Nadella. Now we're going to see on the consumer side, and where really Apple is going to be Cook's going to be the DJ at that consumer AI party. And then you're going to have software, Palantir, the Messi of AI front and center, ServiceNow, MongoDB. In my opinion, this is going to be a tech bull market that continues for the next few years. And even though it's summer, I think there's going to be a lot of bears over July 4th in their caves, in hibernation moves, with their spreadsheets and valuation, missing this tech bull market.
What I found so interesting about your note was that sort of Apple play, that the AI part of the consumer, like how me and Scarlett are going to be buying AI, has not yet at all been talked about in the same way. And that really, truly is an Apple with their massive install base.
Exactly. I mean, like, we thought being at Apple for WWDC, a historical moment. Because most consumers, 20 to 25% in the world, they're going to access AI through an Apple device. Now, someone will be like, okay, well, ChatGPT, what's that going to do for me? This is just the start, because you're going to have hundreds of apps that are going to be built on generative AI for Apple. That's just more money for them as services, and what I believe drives an AI-driven supercycle, starting with iPhone 16. You saw some of those numbers. We saw it in our checks in Asia. This is robust. So anyone betting against Apple is like betting against Tom Brady coming out of Michigan 2000 draft.
David Goads still vividly remembers the dot-com bubble. A Harvard Business School professor at the time, Goads saw a flurry of talented students forsake their MBA dreams to join fledgling internet startups. From his perspective, today's generative AI wave doesn't conjure the same sense of reckless abandon. His current role at Johns Hopkins sees him teaching students who maintain a healthy skepticism toward AI, a stark contrast to the exuberant spirit of the late 90s. The giant leaps in AI led by companies like Nvidia signify a deeper technological revolution rather than mere speculative hype. And the stock market, a place where logic occasionally takes a back seat to fear of missing out. Skeptics warn of an impending tech bubble driven by AI euphoria, recalling the historical cliff dive of companies like Pets.com. However, a prominent figure in the financial world, J.P. Morgan Chase CEO Jamie Dimon, dismissed such concerns. He candidly told CNBC, "When we had the internet bubble the first time around, that was hype. This is not hype, it's real." Indeed, generative AI is making waves. Companies developing AI technology, particularly Nvidia, have witnessed their stock prices soar. Just last year, billions of investment dollars poured into the AI sector, As one analyst noted, generative AI is the most disruptive technology since the internet. Yet, the skepticism surrounding AI offers a level of scrutiny that was absent during the dot-com era. There's a certain dread tied to AI's potential drawbacks: state-sponsored hacking, chatbots behaving bizarrely, and AI models that produce eerily realistic music. Unlike the whimsical wonders of the early internet, AI's power brings an undercurrent of societal concerns. From policymakers to academic institutions, everyone is diligently examining the risks associated with AI. But these are not the only differences between the current AI mania and the dot-com bubble, so what else? Let's keep rolling. Hello everyone, and welcome back to Investocracy.
Let's talk about why you continue to see and be the bullish Dan Ives that you have been for quite some time.
Look, and it speaks to our view going into the year. NASDAQ 20,000 is ultimately where I think we head. Tech stocks up another 15% because even though this has been led by Godfather of AI, Jensen, Nvidia, the multiplier for every dollar spent on Nvidia chip, $8 to $10 flowing through the rest of tech. Software, infrastructure, semis, and I think now consumer AI revolution with what's happened in Apple. In my opinion, it is 9 p.m. in the AI party that goes to 4 a.m. And I think this tech market, bull market's going to continue.
How long does it take to get to 4 a.m. though?
I think in our opinion, it's a 2-year tech bull market because I think the next phase, the second, third, fourth derivatives, it's about the use cases playing out. Of course, you see what's happening with Microsoft, the hyperscalers, Google, Amazon, but then next, it's going to be names like Palantir, MongoDB. I think what McDermott's doing at ServiceNow. You look at Oracle. If someone told you Dell was an AI name 6 months ago, they'd say there's no way. Look at it today. And I think it's a 1995 moment, not a 1999 moment. I think numbers go up significantly going into next year, and it speaks to our view where the bears will continue to yell in their caves about valuation with their spreadsheets, but I think this tech market continues to move higher.
In the spring of 1999, 1 in 12 Americans was reportedly starting a business. A surge of capital flowed into internet technology, propelling stock valuations to ridiculous heights despite flimsy business models. Banks, flush with cash courtesy of the Federal Reserve's money printing spree, invested heavily in startups with little more than a flashy website. By the time Pets.com went bankrupt barely a year after its IPO, the damage was done. Trillions in market cap had evaporated. The situation with AI seems much less haphazard. Although possessing a lofty valuation, AI companies build on intricate technical foundations, unlike the simplistic tech of the dot-com bubble. Investment in AI appears more measured, with stakeholders keen on both the technology's promises and its pitfalls. D.A. Davidson's Gil Luria contends that applying the term bubble to AI is misguided. While some caution that stock rallies, particularly for AI hardware companies, seem eerily similar to previous tech bubbles, Luria draws a noteworthy distinction. According to him, AI software companies like Microsoft have shown genuine profit boosts, indicating sustainable growth rather than unfounded enthusiasm. In contrast, AI hardware might be approaching a saturation point. Analogies to the dot-com bubble aren't entirely unfounded, though. The AI chip-making giant Nvidia may face a fate similar to Cisco Systems. During the early internet era, Cisco's stock plummeted 80%, mirroring the cyclical patterns in tech stock valuations. Luria warns that Nvidia's revenues could dip as major customers, such as Google and Meta, pivot to in-house AI chip production. Even critical voices like Richard Windsor of Radio Free Mobile acknowledge that AI's market dynamics are complex. Windsor points out the visible financial overextension, reminiscent of dot-com euphoria, but suggests that any AI bubble burst would be softer than the dot-com implosion. His reasoning hinges on AI's potential for significant revenue, even in its immature state. Contrasting this with the internet's gradual evolution during the 90s, Windsor predicts AI's growth will be measured and cautiously optimistic. To truly understand AI's trajectory, one must consider the caution signs. Tech companies offering services gratis, monetization struggles, and wavering trust in generative AI due to security concerns. Windsor sees AI as fundamentally constrained by its inability to distinguish between correlation and causality, a barrier to superintelligence and limitless growth. And analysts like Luria predict Nvidia's stock might stabilize within the next 12 to 18 months, reflecting a natural recalibration post-hype. This outlook underscores the importance of discerning between sustainable investments and fleeting market exuberance. So with a calculated investment in AI, should investors throw their hats into the AI ring? But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
You've been saying it's 95 for 2 years, Dan? How long does 1995 last?
So I think, look, in 95
Yeah.
ultimately becomes 96, 97.
Of course, yeah.
But the difference here is that you talk about the CapEx of Meta, 50 billion, what we're seeing Microsoft, 100 billion. As someone that covered tech back in the late 90s, this is not a bubble. This is
Right.
not a 99 here it comes moment, which is, I think now it's about really a fourth industrial revolution. It's about that multiplier. Now it's software. And I think when you look at consumer, that's why Apple, it's going to be the renaissance of growth that starts as AI-driven super cycle from Apple. And that Apple, Microsoft, Nvidia on the enterprise side, that's where I think it's a get out popcorn moment, in our opinion, for tech stocks still, 15% higher.
And even when you're sometimes negative on names, you seem to still be positive on them. I think of Tesla, which, by the way, you were right to stay positive because the stocks come back. But, you know, on the negative side, you do write the losers are going to be, in this revolution, will be the tech players that get squeezed out of sales cycles, technology-driven platforms, and future growth opportunities because they don't have the tools, tech, or software engineers to compete. So what does that mean, and who is that likely to be?
Yes, you've seen some of the disasters, UiPath, and some of these smaller players that have been squeezed out of sales cycles, what's happened across software. So I think what's going to happen is across software, across semis, those, it's not just saying AI 40 times in a conference call. Now, to Mike's point, now the next 6-9 months, it's about execution. I think strong gets stronger. I think a lot of the smaller players get squeezed out. Ultimately, I think that will be massive consolidation in terms of that phase for software. But I think any sort of hiccup that these companies, you'll see these stocks down 20, 30, 40%, which in our opinion is you focus on the themes, you focus on the winners, the Microsofts, the Apples, and then even go like mid-cap. I think in cybersecurity, and I talk about value, I think software and cybersecurity is where I see just massive value. Names like CrowdStrike, Zscaler, Palo Alto continue to be that as a table pounder, even though, you know, many, including New York City cab driver, were bearish on Palo Alto 6 months ago. It speaks to what we're seeing with this cloud AI revolution.
All right, you're going to let us know when 99, 2000 is coming, though, right?
But right now,
no, you won't be able to do that. You're too bullish.
But the point is, it's 9 p.m. It is not midnight, and I think this thing goes to 4 a.m.
And this is a man who knows how to party. I mean,
does
look at him.
before
Well, you know the old saying,
Look at 'em.
the clocks have no hands. That was a...
A calculated investment in AI. So, should investors throw their hats into the AI ring? The current state of AI stocks suggests a potential for growth tempered by cautious realism. Nvidia, despite facing an impending plateau in hardware demand, remains a robust player due to its strategic positioning and technological assets. Meanwhile, companies focusing on AI software demonstrate promising revenue trajectories, bolstered by practical applications and solid fundamentals. The tantalizing blend of excitement and caution surrounding AI represents a calculated opportunity. Investors are urged to research meticulously, track industry trends, and stay informed about potential market shifts. The AI sector is not a get-rich-quick scheme, but a field ripe for strategic investments by those who appreciate its nuanced landscape. As the AI revolution unfolds, the reader's insights and opinions are invaluable in navigating this complex journey. The question stands: will you dive into the new world order of AI stocks? Or will you watch cautiously from the sidelines, awaiting the market's next move? But what do you think about AI-based stocks? Is it a buy at the current price? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for this market is. If you would like to know what big tech companies have been up to these past few days, Go ahead and click on the next video on your screen. See you there.